Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Harridge.
Welcome back to Uncontested Investing. I'm Tim Harridge. Thank you so much for stopping back by. Today, I have a very special guest, someone I look up to, David Phelps. David, thanks for being here.
Tim, it's a pleasure.
So, David, before we do the blow up, I always just let people, why don't you tell the audience a little bit about yourself?
So I started real estate when I was like 22 years old, but that wasn't my end game. I was going to go into a profession which has stability and freedom and some reliability to it. So I bought my first property back in 1980. There's some context there that we can talk about a little later. You know what I'm talking about. Got started there, but also went to dental school. So I did both. I did dentistry by day, and I did real estate by nights and weekends. And a few years down the road, my daughter became very, very ill. She's got through it all, leukemia, a liver transplant. So when I decided I need to make a change because I need more time. I want more time, buy time back. And I had enough real estate to give me the opportunity to make a pivot. I left private practice, clinical dentistry, left it. Didn't know what I was going to do, but I always loved real estate. Real estate, there was just something about it that let me explore more who I was. You're working in someone's mouth, it's very, very small. It's a microcosm, right? And I found out I was more of a visionary. Right. I like to get in, get out type of guy, and dentistry doesn't allow you to do that much. You have to spend a lot of time there, right? No regrets. It was all good. But it allowed me to really explore what's really inside of me. And so over time, I had other professionals, health professionals, people I knew in my collegiate arena said, well, David, how did you do it? Meaning, how could you leave your profession, your career at a relatively young age? Because most people have to think about, I don't quote retire until I'm in my 60s. I said, well, on the side, I always did real estate. And then the question was, well, could you show me how to do it, right? And that's where Freedom Founders, the community I have today, which is really accredited investors, people that are in professions, healthcare, most of them, but in businesses, they just want to know, how can I, as a busy professional, connect to real estate? Because I always want to do alternatives. They don't like the stock market. A lot of people don't, right? And they want something more tangible, but they don't want to go out and do it themselves. So I think that's where you and I complemented each other a lot. You work with a lot of people that are on the street, boots on the ground, and we need to have those kind of connections. My docs don't want to be, dealing with contractors and tenants, but want to be able to connect with people that they know, like, and trust. And I think that's a big part of what we both do.
So I want to do the bluff in just a second, but it's something that I've been thinking about a lot as now I'm in my mid-40s. And somebody said it this way. They said, you start out as the jockey, and then you end up owning the horse. And then ultimately your goal is to own the park that the horses run in, because that person gets paid every day.
Sure.
Yeah, right. Yeah, they make money off the gambling, off the horses, and it doesn't matter who wins or who loses, they win, right?
Good, right?
And so it's kind of the boots on the ground guy or girl is kind of how we started, right? Is the spending all our Saturdays over trying to paint and carpet a house. And I saw you 15 years ago. I was like, okay, this guy, he's already, he already owns the park, right? Like he's got the park where everyone else is paying to play. So I want to talk about that. But first, every week we do the bottom line up front, because people's attention spans are short.
Yeah.
And they may stop and get gas and forget to turn this thing back on. So I want you to take up to 2 minutes and just tell the audience the most important things you see in today's market, what they should be doing or avoiding, or whatever advice you have. You good?
I'm good.
Go.
So back when Bill Clinton was running for president, one of his advisors, James Carville, said, it's the economy, stupid. So it is the economy today. We have had 12 years of a bull run market, financial products, real estate. And what I tell people today is you've got to be cognizant of the fact that the market's changing, it's shifting. Is that a bad thing? No, it's a good thing if you're positioned for opportunities. The problem is a lot of people look at recency bias. Well, what's happened in the last couple of years, last 3 years, 4 years, 5 years? The market has been a big part of why people have been successful, and that's good. You have to be doing something, but we have to look at where's inflation going? What's the Federal Reserve doing? Interest rates are climbing. They're not through with that yet. Consumer confidence, consumer spending is a huge part of the GDP. Where's that going to go? Recession on the back end of this year. What's going to happen there? So my point is, what got us to where we are today, wherever you are in your life, your entrepreneurial pursuit, success that you've had, awesome, but be cognizant of the fact that there's a change in the marketplace, and you probably have to look at some iterations that allow you to play the long game, get through a gap, understand what's on the other side, how you can position yourself, having the margin, the liquidity to be able to play to fight another day. And a lot of people, I think, don't see that, and they get blindsided. Those who do will do very, very well in the future.
So 20-something-year-old David in 1980 would not have understood anything you just said.
Not a clue.
And 20-year-old Tim wouldn't have understood it, and 40-year-old Tim is just now learning to understand it. And I was accused yesterday on a podcast of forgetting where I'd come from and talking over people's heads. And I want to say this to the audience: you'll never understand any of this if you don't try to. And I was guilty in my 20s and 30s of thinking that my effort and ability made these other things not matter, right? I could punch my way through any problems I encountered. I wish I had received more of a financial education and understood the way these markets really functioned a lot earlier in my life.
I think that's for all of us, Tim. As you said, I had not a clue. When I was out, buying my first property in 1980, the mortgage interest rate was 13.5%. I didn't know if that was good, bad, or otherwise. And it really didn't matter, because when we're young, we don't have a lot to lose. And I think, being excited, being exuberant, having energy with whatever your passion is, that will carry you a long ways. But yes, there is an ability to be a little bit more aware of the markets, the economics, and making some amount of study of that can really bode well for people. So you don't have to become an expert. You don't have to do all that, but just find some people that do understand it, so you can at least prepare a little bit to take advantage of what the market gives us, which is what good people have done. It's what you do, what people that work with you do. They take advantage of the market, but also understand there's going to be some changes in the market that are coming along. And how do I not pull back and not do anything? You don't put your head in the sand, but you just need to position yourself to be prepared for those, hedge your downside risk, right? Examples would be careful about financing, short-term financing, variable rate financing on extended projects right now. So if you're doing good work, great. But be careful of long-term projects where your financing's not solid, right? Because that's where people get tripped up. We see it in every downturn. People get leveraged up because the market's taken care of them so far. We've had 40 years or of decades of lower interest rates, historically cheap interest rates. That has fueled the economy across the board. Great, take that. But now it's a different market cycle. We have not, I don't think, begun to see the lag effect of what interest rates being played out at a higher level are going to do. We're starting to see it. The Federal Reserve wants to tamp down inflation, but it's like trying to steer the Titanic through the Panama Canal. It's not a fine-tuned thing. It's like it's this way, and they never can control it well. So we can't control that. We just have to be aware of what it is. And so how do we protect ourselves from getting lurched side to side?
I was at a conference in December, and an economist said that we need to stop calling this a correction and realize that it's really just a reversion. We're just reverting back to
the mean, to the average,
to normal.
Yeah.
And I think there's a lot of people that recency bias is something you just said, right? We just remember what it has been recently and tend to overreact. And I find it interesting what you said there. As I was leaving a mastermind last week, I got the organizer to let me talk to the entire room, the audience. I said, listen, right now, you're all feeling a false sense of confidence.
Yes.
You all feel like the worst is over. And I summarized 2022 as I got up on the stage and said, look out, this is going to be bad. And most of the people ignored me. And then in May, they were like, that's not so bad. And then by the time August rolled around, they were screaming. But then in December, they were like,
not so bad again.
Yeah, not so bad again. And in early February, the 30-year homeowner rate dropped down to like 6.1. In the last couple of weeks, it's shot all the way back up to 7, which is percentage-wise wild swing.
Very much.
And if you're in a long-term project and you were counting on 6% for a fixed-rate mortgage and you end up with a 7, there's going to be a lot of unhappy people in that deal.
Big difference. People say, well, it's just a point. Right. No, it's not just a point. You have to factor that into what your strategy is. What's the takeout? What's your financing takeout? Or if you're trying to sell at a certain cap rate, changes everything. So again, it's a different dynamic, and we both know very good operators that have done very, very well in the past because they've been good operators under the circumstances they've had to work with, which has been awesome. But it's changing, and I think the hardest thing for us to do as entrepreneurs, Tim, we both know this, is to never slow down.
Right.
We never want to slow down, particularly when we've had these tailwinds that have been beneficial to anybody who's been out there working hard, as we do. It's been good, and you feel like this is great. I can do more, and we want to do more. We want to expand and do more of what we've done to be successful. But also, I think there's a part of us that we get satisfaction of having teams and making difference in communities by the real estate that we take and renovate and make it more useful and more valuable. There's a satisfaction there. We want to make that bigger. I just think it's a time to kind of go back to what Jim Collins talked about in his book, Good to Great. And he talks about the 20-mile march, right? It's like the tortoise and the hare. You don't want to just go really hard just because you think you can. Is you need to have some discipline, and discipline's hard to do, again, when there's exuberance in the market. Right. So it's a hard thing to do. I'm the same way. I have to have people around me that sometimes, keep all my ideas and say, okay, great ideas, David, but, file those over here. Right now, let's focus on what's important right now. And it's hard for the entrepreneur to do that. It's hard for us to do that.
I want to frame up kind of the middle segment of the show because it's hard for some people to imagine themselves sitting in my chair and then 15, 20 years later sitting in your chair. And I surely never imagined to have had the business accomplishments I've had. But it is not a sprint, and you have to be willing to make mistakes. And I feel like you also have to be willing to concede you don't know everything, right, and get around people like yourself and listen and be observant. I told someone yesterday, my job was always, I was raised, we make money with our hands. You're going to earn your way. You're going to create your destiny. It's my hope, and it's one of the things I like about what you do with your community, and we'll talk about that in a minute, it's my hope to teach my children to learn to make money with money.
Yes.
To learn to make their money do the work for them so they can have that precious time you were talking about.
Exactly.
Could you talk a little bit about how you made that intellectual switch? I know Jenna's illness was a huge part of it, but you were a practitioner. You were a dentist. You had to work with your hands. Yeah. You had to create value with the real estate yourself. Yeah. Where did you get the idea or the inspiration and, frankly, the confidence to make that transition?
I knew inherently, even back in the 80s when I was just reading books about real estate and comparing and contrasting real estate, tangible assets that we love, to the financial markets, and I just couldn't make sense out of the financial markets. So I knew inherently that real estate was going to be something that would open doors for me, but I didn't have a game plan. I didn't have a timeline. I didn't even have a strategy. I was just a 20-mile marcher, disciplined, buying properties using creative financing back then and building this portfolio that I really just worked on snowballing down the debt because I was taking over debt, seller financing, everything you do, right? So I didn't have this game plan, but by being disciplined and buying the right houses and learning how to manage them, when Jenna got sick, my daughter, when she was really, really sick at age 12, and this is after she went through cancer and epileptic seizures and then had a liver transplant, that's when it really forced me to take a look at my life and what did I have? Yes, I had my hands, and like most people, I could go to work and I could always make a living, but I wanted my time back. I wanted to say, well, when can I harvest some time back? And so I really looked to see what did I have in the real estate, because I never really took accounting for it. I had equity. I had properties that had been paid off over this year, about 15 years of doing this. I had a number of properties paid off, and I did have, quote, passive. We know it's not totally passive, but it was to the point where I could be gone and spend time with her and not be handcuffed to a well-paying trade, a profession, pays well, but I had to always be there. I had to show up. There was always a schedule. There's the good and the bad of that, right? And so that's when I really realized just what you said, is learning how to make your money, equity, net worth, wealth, wherever it is, make that work for you. And so that gave me the freedom to step away from dentistry. I didn't know if I'd step away for a long time, but it gave me breathing room. It gave me margin enough. I said, I'll step away for 18 months. Maybe I'll go back. Maybe I'll buy another practice. Maybe I'll work for somebody. I could do a lot of things, right? It gave me what I call optionality. That's what you want in your life. And the sooner you can get that, the sooner your life can change. And then you can really find what you love to do. So I realized that that's what gave me the freedom. And then I found what I love to do next, which is helping my colleagues in a different way, not doing dentistry, but helping them with what I'd learned financially over the years by being plugged into smart people, smarter than I was, learning about how finances work and about real estate. And I'm like you. It's like, I'm willing to do the work I need to do with my hands. I'll do it all day long. Get in there and do it. But boy, when you can learn how to make your money work for you, and that's what real estate gives us the opportunity to do. That's what we love about it.
It's a game changer.
It is a game changer.
So we're going to take a quick break. When we come back, I want to talk about books, because you've mentioned a lot of books and reading books, and you have a book. I want to talk about freedom, because it's one of those things that I hear a lot of people throw around, and you look at their lives and they don't have it. And then I do want to talk about 10 years ago, I heard Jenna speak when she wrote her book, and that was very impactful. So we're going to take a quick break. We're going to come back, and we're going to talk about freedom, books, education, and what's really important in life. So stick around. We'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Welcome back to Uncontested Investing. I'm still here with David Phelps, Dr. Phelps. Still a doctor? Is that still what we call you?
They haven't taken it away from me yet. I'm licensed, probably dangerous today, but I haven't taken it away.
So I want to dial in on freedom. It's so many people say they get in this business for freedom. They say they get in this business, for wealth, but then we all tend to work really hard and not enjoy that freedom that we claim to want. You're different. In my observations, you don't work a whole lot. And when you do, you're very intentional about when you work. You're always playing tennis or traveling. Could you talk about how you went from looking maybe at freedom as having a bunch of money to looking at freedom and how Freedom Founders is all about helping people have a bunch of time?
Sure. It's a great provocation, Tim. I believe that as hardworking, responsible people that we are, we never know how much is enough. And that's not to say to put a lid on anybody's aspirations to grow, have as much money as you want. But as long as we never have some milestones to measure and say, I've done well and I can actually take some time off, we tend to want to get back and do more. Is there a little bit of a fear factor there? Maybe. There may be some inherent fear inside us. Maybe it's how we grew up, hard to say. I had that in me. It's like, I just want to keep making more and more and more. It was Jenna's situation with her illness that caused me to pull back and say, wait a minute, what's really important? Otherwise, I could say I could still be pounding it out, doing real estate, doing dentistry, trying to pile up more assets. To what end? What I found was when you do have milestones and you can actually measure and say, well, I've replaced so much of my lifestyle burn rate with my wealth that's working for me. I don't have to go in and do the work. I've got real estate or whatever it's coming from. When you can see that happening, it does give you the ability to pull back some. And when you have that margin in your life, it doesn't mean you quit. Doesn't mean you go to play golf 7 days a week or go to the beach. That's all fine. We still want to be relevant. People ask me today, well, David, why do you do what you do? If real estate's been so good to you, I go, because I can never just sit around and do nothing. I've got to do something. And it gave me the opportunity to figure out what I want to do. It's like, how do I still get to be a part of what I was for many years, a dentist? So I get to be a part of the health professions in a different way now. I always loved real estate. It's probably the bigger part of me than dentistry, even though I did all the training in dentistry. Real estate was just on the ground, right? Learning from great people. But I think the freedom part is right, is we get into a role where we're doing well, we're making more money, building more net worth, but how much is enough? And so once you see that you're actually replacing so much of your lifestyle burn rate, that's what gives you the ability to actually look at your life from a bigger lens. And I needed people around me to help me see that too. I couldn't do it by myself. But just to look and kind of put the puzzle pieces around, I help a lot of doctors who, again, they're trading time for dollars with their hands. They can make a good income, but it's only sustainable to the fact that they continue to work. And the same point that they put their money in the stock market and 401ks and, some discipline there. But the problem that keeps them from having freedom or being able to say, I can cut back from my practice or sell my practice and live some life before I, 80 years old, is that they can actually see how their money that they've acquired can actually work for them in a tangible asset. Stock market, it's all over the place. Or you go to bonds, it's like, well, yeah, but that's only paying so much and it doesn't work. So you really have to have the ability to see, how does my money work for me to let me take some time off and develop, what do I want to do next? It's kind of like evolving in your life. You don't have to stay stuck in one place. And that's what I see a lot of the doctors. They're afraid to let go because they never learn how to orchestrate cash flow. And in the end game, it's all about income, but income that you don't have to go do the work for. It's income that's just paying your way. Now I've got some room to live my life. I still want to be relevant. I still want to make active income. I might want a different business. Perfect, great, figure it out. But you don't have to stay stuck in one place.
I've been telling people all the time, they're like, what's the biggest mistake you've made? And in my 22-year career, the biggest mistake I've made is I didn't keep enough houses. And my advice to people lately is just one more, right? If you're planning on keeping 0 this year, keep 1. If it's 2 this year, keep 3. Like, so in 20 years, it'd be a difference in $10 million worth of net worth for me. And that's just huge. I want to talk, you've mentioned several books, and clearly when you were in 1980, you couldn't just hop on YouTube or Apple Podcasts to consume information.
No.
You actually had to go to a bookstore to pick up a book.
Or they also had these things called libraries. You actually had a card. You can rent a book.
You can borrow it.
You can borrow it.
So, and then you said you didn't figure it out on your own. You were around some really smart people. Maybe spend some time talking about where you found knowledge, why books were important, how you found the smart people, and how that kind of helped drive you where you are now.
Well, I can tell you the first 2 books I found was one by William Nickerson. First edition was How I Turned $1,000 into $1 million in real estate. William Nickerson is long past, but the fundamentals of the book still apply today. Dr. Al Lowry, probably a name that a lot of people that know. Those are the first 2 books I found, and from those books, then I would usually write a letter and see if they had a newsletter or if they did a conference. Back again, there's no internet, so actually I type a letter and send it to people. But you could do that, and people actually open letters and they correspond back because they were busy on social media, right? You can actually get to people.
They didn't have to check their email.
They had to check their email, right? And so what I found was it's just like anything in life. You get started somewhere and you want to ascend the ladder, meaning ascend the people. We talk a lot. I think you and I talk a lot about what Jim Rohn says. You want to surround yourself. You become the average of the 5 people you associate with. Well, you always want to up that game. Initially, when we start out, you find the first few people, there's people that might just be selling stuff, right? Nothing bad, right? You have to figure out, okay, you start somewhere. But moving yourself up to find who you believe are the real people who are actually have done it, who have done it. And they're not just selling the stuff, the seminars, the newsletters, because they need to make the money. They do it because hopefully they enjoy it. So I had to find those people.
Right.
And the books is where I started. And then I found Jack Miller and John Schaub. John's still around. Jack's passed away. The guys from Florida that I spent my first 15 years with just opened my eyes to the world of finance, not just real estate, but finance, which we both love, right? And seeing the difference.
It's the language of business.
It's the language of business. And I'd say I never took any courses in school. None of those. Zero. No economics, nothing. I had to learn all this outside, which is okay. But it just opened my world up so I could see things from a different lens. And that just changed my thinking about everything I did. Even in when I was doing dentistry, I was always thinking about, other iterations, and not to knock my friends in school, all smart people, highly educated. But I think I found this other tribe of people outside my profession that really opened doors for me. And I think that was the key. So if I could say one thing to people listening, wherever you are, whatever you're doing, keep ascending that ladder, keep going to where those next people are, talk to the people you trust right now, and go to the next level, because that's going to move the needle faster than anything.
So you said tribe.
Yeah.
And I was literally sitting here thinking about your tribe. And I think the first one of your events I went to was in December of 2012. You were doing the hotel events over by the airport. And I thought you were a little corny. You come out with your white dentist.
Did I do that back there?
And you had the big chain on.
Yeah.
And the chain was metaphorical for how they were chained to their practice. But I remember thinking, wow, this entire time he is visually reminding them what it feels like to own a business where if you're not there, the business doesn't exist. Like it was your tribe, or they were actually finding their tribe by watching you, because most people don't understand them.
Yeah.
And a lot of people in America or in the world think, well, what a lucky guy. That doctor, he's rich, right? They don't realize that he's getting up at 4 a.m. every day, and he may not get home till 8 p.m., and he's got no choice but go do it again tomorrow,
Right.
or there's no business. And I think a lot of us create businesses that way. But I found it interesting how your tribe of people, it was that one common thread was that you're chained to this, and until you learn to break this chain, you'll always be chained to it. And so I went in a weekend event from thinking you were a little corny to thinking it was complete and genius.
Okay.
So
Thanks for turning that around. About what? I created a bad image. I could have brought those chains today, but I didn't.
Next time.
All right, next time.
So, I've always seen, like in these masterminds we're part of, you take great pleasure in spreading what you've learned. Is that because these other people were willing to write you back in the 80s and you just want to help people like ascend?
I think that's really where it is. I think we all have something innate within us. When we've done well, been blessed to a certain extent, I don't know good people who don't want to give back somewhere. I mean, you can be charitable in your tithing, your giving, but also how do we sow what we've learned into people who are interested in hearing about it? And yes, if not for the people, and both in the profession of dentistry and in real estate mentoring, if not for those people, I wouldn't be able to be where I am today. There's no question that those people, and I paid to play. But it was the return I got by being in their circles, in their mentorship, just exploded my ability to think differently and live a different life. And so there's no question if I can help other people who I have an affinity toward, whether it's my colleagues in medicine or dentistry, or just the younger generation. We talk about our kids, right? And what we want them to how they look at life. Not to tell them what to do, but we want them to be resourceful. I don't want to hand them money. That doesn't do them any good. They got to be resourceful. They have to understand, how to do it, because the world is, as we talked about earlier, it's changing so quickly today. You cannot rely on whatever you thought the traditional model was of going to school, getting a job, career. You've got to be a lot more fungible or adaptable today.
It's amazing how many people I meet that automatically assume that I want both of my children to be in real estate. And they're just blown out of the water when I'm like, there is no way I want them to do what I do. And my oldest son's going to Oklahoma State. He's training to be a pilot. He loves to fly planes. But he's going to, those first years as a junior American Airlines pilot, there's a lot of things he's going to have to do he doesn't want to do. But we talk about it a lot, like do what you love. And if you love that, do it. I'll teach you how to make money with money. Like eventually one day I'll die and there'll be a lot left over. And, or maybe not. I don't know. We'll see.
They're coming for it. They're coming for it. I just tell you, they're coming for it.
They're coming for it. So I enjoy now transitioning that thought personally to not wanting my children to grind versus I want them to fly, right? I want them to learn these things that we've had to learn. Skip it's whatever parent wants. I want them to skip the mistakes I made.
Sure.
And I want them to live a prosperous life, right?
But at the same time, you want them to also have some setbacks and learn some lessons, right? You're not going to just pave the way, and I know that from you. You're not going to clear the way. You let them trip and fall and stumble, but just not badly.
Because discipline's not free.
Yeah, that's right.
Like you mentioned discipline, and I want to dive into that. But first, I love that on your book here, The Silent Retirement Killer. I want to transition a little bit because I was raising some private capital recently for some investments, and I had people asking me privately, like, will people really take 8% if it's just because it's hands off? And I'm like, yes.
Well, yeah.
That's high sometimes.
That's right.
Could you talk about the mindset of trying to beat inflation when it comes to your retirement?
Yeah, well, we're seeing inflation for the first time in 40 years. We spoke about 1980s when I came out of school, and I had no clue that inflation that year was up at 15%, and Paul Volcker, the Fed chairman, was trying to knock it down. That's why interest rates went so high. And he did. Two back-to-back recessions in 80 and 81. He beat it back down, but he went hardcore. We've got inflation back again. The book talks about why. We don't need to go into why. It's here. And for the first time in 40 years, people who have never heard really about inflation being a factor in their lives, they knew the word, but it's like, what does that mean? Because we had low inflation for globalization, technology, but now we've had a change with the pandemic, supply chains were onshoring again. It's changed dynamics. So I believe that we're going to have a relatively constant amount of inflation here on out. We've got massive debts. It's the only way a government can deal with what we're dealing with. It's through inflation. You can only tax so much. You can't default. So inflation is the way it's going to go. So yeah, they'll talk about tamping it down and it's all going to be good, all be good. But inflation's insidious. And if you run numbers, you can see that even at moderate rates of inflation, well, what's moderate? Well, 4 or 5% might be considered moderate. High would be what we had 8 and 9% this last year. That eats up into your wealth very, very quickly. It's the insidious way the government does steal wealth back without you writing a check.
Right.
So it doesn't feel like it's painful. You don't see it anyway. It's just kind of like a cancer that starts in your body. You don't feel the symptoms right away. And if you don't catch it, eventually, it eats you out. And inflation will do the same thing. So people need to understand they need to get a higher rate of return. Who does inflation hurt the most? People on fixed incomes, Social Security. I can only put my money in, CDs, whatever. That's where they get hurt the most, and it's not fair. It's just the way it is. So to find a better rate of return, but still to protect your principal, which is key, right? That's where, back to your point. Well, will people take 8%? Well, yes, in times of chaos and turbulence, savvy people are not shooting for those high returns. A lot of people try to chase yield. We know they chase yield. Well, I'll only take, a 12 or double digit. Well, I can give you all the yield you want. So I tell people, how much risk are you willing to take? Right? I mean, it's easy. I'll give you that. So prudent people understand that it's a long game. And I just talk about you take what the market gives you. Don't be greedy. Don't be overzealous. But in times of chaos, a solid 8% return secured by good assets, by a good operator, where you're not you're not playing the high equity game, the fast multiple exits in the outsizing of the property exits. That's all been great, but I don't think that's be tamped down. So now 8%, 8% to ride out for the next couple of years could be great. But again, you've got to be involved a little bit with your money, whether you're hands-on or you're passive. That's why I love about real estate. I can be connected to real people. I don't have to be, dealing with Wall Street where I don't get to know who the people are. I can actually develop my own criteria for who I want to invest with, my own due diligence. That's a sophisticated investor, but that's who you got to be today. If you're going to manage your capital going forward, you've got to get in the game a little bit.
It was funny yesterday. I was talking about triple net leases, and there's a couple really good operators I really know well and trust that I've done some triple net lease investing with. And the guy was like, I don't really understand triple net. Can you really explain it to me? I said, absolutely not. I don't understand it. But Fred and Dennis, I trust them.
Right.
And when they showed me the deal, it's JP Morgan Chase is the tenant. They've been there for 10 years. There's another 10 years left on their lease.
Pretty solid.
We're going to run it up for 5 years and then sell it to another person that's going to run it up for 5 years. And I trust them. I don't need to know every aspect of the transaction. Right? We don't need to know how many paper clips there are. Right? Like, I just need to know that when they need paper clips, they know when to get them and where. Right? And I think that's what, your group, from what I remember and I've heard, it's all about find the good operators, find something that's going to be secured by a hard asset, and, it's inflation indexed, right?
Sure.
I mean, that first house you bought in 1980, where was it?
M Streets.
The M
Vanderbilt.
Oh my gosh. And you paid how much for it?
$83,500.
What's that house worth today?
$1 million. Yeah.
And I use this example a lot. Warren Buffett bought a beach house in 1971 in Laguna Beach for $150,000. And any of us would buy a beach house in Laguna Beach, sight unseen today, for $150,000.
Sure.
That home is worth $15-20 million now. And everybody's like, well, it's Laguna Beach, or, oh, it's Warren Buffett. No. It's the same math that your Vanderbilt house went through. He just started with a little bit bigger number. And that what people don't understand is like that last 10 years, when you're compounding 5 or 6% on top of $1 million, that's real money.
Yeah, talk about Warren Buffett. Interesting what you're saying is that 97% of his net worth was created after age 50, 99% after age 67. So he started way early. But again, you watch that curve, right? And it's slow compounding, 20-mile march, and the compound effect at 6-7%, just steady, takes off. And so people think, how did he do that? Well, he didn't quit at age 65. He didn't retire.
Right.
He loves what he does. So he just keeps that money working. Now, the more money you have, the harder it is to get higher returns. But again, the more active you are in managing your money, as he is, you can still get nice returns. But he shows the discipline what those years of compounding can do. And it can be the same thing for anybody else on a relative basis.
Well, investing doesn't have to be abdication.
No, not at all.
You don't have to just say, here, Fidelity, take all my money and let me, no shot on Fidelity, take all my money and let me know how it works out, right? You can and should, to be a good steward of what you've been given, stay on top of it and understand why someone's telling you to put it where they're telling you to put it, right? So we're going to take a break and come back for the Money Minute, and then I have some rapid-fire questions I'm going to hit you with. You good?
Very good.
All right, stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-vest.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Harridge. I'm here with Dr. David Phelps. He's not corny. That was just a joke from earlier. David, I want to go into the Money Minute. This is my favorite part of the show. I'm excited about what you're going to say. 60 seconds. It can be the 20-year-old David out there, or the doctor or dentist that's struggling with not having any time for the things they love, or just any advice you want to go with. Pour into the audience. 60 seconds. Go.
Define what success means to you. Start with, what are your non-negotiables? What will you absolutely not sacrifice in your life to get to what you want? Describe those, know what those are, get together with your spouse, your partner, significant other, identify those. Until you do that, you're gonna be on different paths. So understand what those are and then start to move forward. Define success. What does that mean to you? What does freedom mean to you? Understand what your lifestyle burn rate is. The more that we earn, make, through whatever our career pathway is, we tend to let lifestyle move up that ladder. That's not wrong, but if you can keep your lifestyle burn rate down to a modicum, a medium level, and then get your net worth, your assets working for you to match that or make a large percentage of that, that's gonna give you freedom sooner. The people that make the most money trading time for dollars are the ones that are more hamstrung, more chained to that trading time for dollars. So as a young person, don't let your lifestyle exceed your income. Keep it at a modicum, because you will find that very quickly you'll have much more freedom. Spending time doing the things you want to do. You'll still work, you'll still have a career, profession, whatever you do, but you'll have that time to spend with your family. Determine who you want to spend time with. Jim Rohn says you become the average of the 5 people you associate most with, and that is very, very true. So if you don't like where you are, look at your environment. Who are you hanging out with? Change that. Find better people to hang with. Remove the people from your life that are not helping you meet your goals. Very, very important. Create some adaptability and flexibility. Have multiple streams of income. Yes, your career, your profession, your technical trade, whatever it is that's important. That's what gets you started. But start determining how you can manage the wealth, the savings, the discipline that you have to create some wealth. How can you get that money working for you? Learn through other people. This is not rocket science. You don't have to go to school and get MBAs in finance. or in commercial real estate. You can do this yourself, you can do it with other people. That's the best way to go. So keep some flexibility, some adaptability, multiple streams of income to give you margin during times when you may have times in your life where things become a little more chaotic or turbulent, to get you through the gap, to survive, to live another day.
So I can't wait to listen to that again. But one of the best examples of that has been a young man that was on our show last year that you introduced to me, Zach Cobbinger.
Oh yeah, Zach. Yeah.
I've been so proud to watch him, and he's another one that they only see where he is right now. They don't see that he and Sarah lived in an apartment for the first 5 years while he was accumulating assets. And I think he's definitely someone to listen to you. I can tell you that. Because you're the one that actually sent him to my office. He said, he told the story of him on the show. He said, yeah, after like a day of talking to me, he realized I was going to be too much of a headache. So he sent me to you, I was like,
no, it was not that at all. I knew what he was made of and what he wanted to do. And I wasn't the guy that was going to be able to help him do that. You were the guy that could really help him. There's several people we can talk about that I know personally that you have helped them navigate and move their life. So Zach was one of those, and I'm really happy that he connected with you because, yes, what he has done through those efforts and mentorship from you, they've done very, very well, no question.
Talk about how you vet operators.
Well, I start with, how do I know this person? How did I come into contact with them? We both know a lot of people, and even if I don't know them personally, I'll know somebody who knows them. So the network comes back to network. That takes time to build that, but the network is a big part of it. Once you have a network, even if I don't know, that person wasn't referred to me, I can reach out to my network. How do you know John? Does somebody know John Smith? And I'll get reports back either nobody knows John Smith, so that's kind of a clue, right? If it's in the real estate space, or yes, we know him and we like him. And so that's where I start. Just, what's the reputation, the general reputation? Once I determine that, then I want to go deeper. I do full background checks. Even if it's somebody I've been hanging out with, because it's not just my money. I've got other people that are looking to me to do some due diligence. So we do full background checks. I look for history. Doesn't mean things that went down or are in trouble with, especially like 2008, but how did you work through those? I want to know the story. What's the story? I'm looking for people that have character, that didn't just have a life that was easy, because no one does, but what did you have to work through? What lessons did you learn? And then when we're looking at, actually doing business with, I want to know what their who's handling their accounting, who's handling their cash flow. I want to see, is there external people, outside, inside? What's that look like? Because I want to know that they have some good fundamentals. I've seen people that have great intentions and they worked hard, but they just didn't have the financial management in place and got off kilter. And I've just got to look for those. So those are some of the key things I look for when I'm looking for someone who's a good operator.
Well, and it's very funny. I mean, and people out there listening need to hear this. I mean, I am a great operator when it comes to deals. I do not handle finances well, so my wife does all that, right? And she and Jackie and Donna, the CPA, and our cost seg folks, like, they figure all that out, right? And my thing is, I'm kind of the money train, right? I'm going to keep pouring the money in, and when I need money, it better be there. And but it's kind of funny. I actually spend more time with the CPA on strategy and kind of the output versus the input, whereas Jennifer and Jackie, the bookkeeper, spend a lot of time on the input and the making sure the things go in the right columns where they belong. Yeah. And then at the end of the year, it's me and Donna deciding on the journal entries and the, she put that there. That really should have been this cost basis. It's more strategy. But I think you just have to understand it. Do what you're good at and hire good people to do what you're not good at.
Yeah, 100%. That's what I look for. I don't expect a visionary to have all those details. I'm the same way. I appreciate details, but I don't want to have to be the one to go dig into them. I want to trust somebody who's giving me the information I need and to push back on me when there's something there that I need to know about. Right. What's that dashboard look like? So if you have that, and I know an operator has that, and I can see it, and they can walk me through who's doing that, that gives me the confidence to say, okay, they're going to do the best they can in the marketplace, whether it's great or average. The marketplace will be what it is, but if they're a good operator, they have those financials in place, that I can trust them to go forward with my capital.
Right. How important is tax strategy for your network?
Well, I look at tax strategies as being like the the secondary part of investing or being in business. There are, as we know, in both business and real estate, there are some great tax preferences that allow us to defer, mitigate taxes. I don't put that on the forefront.
Yes.
I think that's where the problem is. Some people, they push everything to, well, how, what's the best way I can like lower my taxes? I think it's the wrong way to look at it. I think you have to look at the economics first, and then say, after that, can I remold this opportunity in a way that is better than my taxes? So I just say, don't let the tax tail wag the dog.
Well, a lot of people, oh, that's a write-off. Yeah, but if you're going broke, you don't need write-offs, right? Well, David, we're almost out of time. Could you talk a little bit about what Freedom Founders is?
Freedom Founders is the community, the tribe that organically started to build after I sold my practice some 17 years ago. It didn't happen overnight. I didn't have a vision for it. So I said, I have margin in my life. I had a handful, I mean, probably no more than 5 doctors, dentists who knew me and said, it's great that you got out of practice to spend more time with your daughter, but how'd you do it? I mean, that's what, how'd you do it? Not the why. And because I didn't tell a lot of people, unless they were close friends that I did much real estate, I kept them separate. I couldn't have tenants come to the office to pay rent.
Oh, I know.
It'd be a mess. So I kept those separate. And so they asked me, could you show me how? And I said, yeah, but I started when I was in my 20s. You're in your 40s, 50s, or 60s. You're probably not going to want to do it the way I did it. So long story short, I let them tag on some of my deals. That was, a handful. And so that's why I worked some private capital, especially coming out of 2008.
Yeah.
So we were picking, property off like fruit off a tree, right? It was just easy. Did a bunch of those. And then more referrals coming in. All right. Do I want to go? My wife, Candace, says, David, be careful what you build because you have to live with it. So I didn't want to go back and build another business. So I thought, well, how can I connect the capital, the doctors who want to connect their capital to good people without me having to do that work? And so I knew a bunch of people, obviously, over the years. And so I just brought a handful of people that mostly started with single family. Keep it simple, right? And I just formed a little group. I didn't even call it Freedom Founders back then. Just let's get together and I'll be the translator. I'll translate. I'll show you all how to make this work. And that's where it started. And then it just grew. So today it's a community of well over 100. It's mostly couples, which I love because the spouses get involved because we're not talking about clinical stuff. They come because what's about life? It's about life.
Right.
And they also develop the confidence, even if they're not doing the financials with their husband. It could be either way. Sometimes the wife is the more financially savvy, right? But either way, they're on the same page, and now they're doing life together and also getting the results and outcome, which is not just more money, but it's having that sustainability that gives them the confidence to say, hey, we can take more time off. We could sell the business or the practice. We can make decisions now that we didn't have the confidence to do before. Right. And that, to me, is what's transformational. When people have that confidence to see how money can work, you can make it work, and then it gives you the options to live life the way you want to live it.
So you have a book, you have a tribe. Any other ways the audience out there, if they're like, man, this guy connects with me, ways they can connect with you or do business with you?
Books on Amazon. That's probably the most relevant book on inflation. The community, if the professional people in business, freedomfounders.com. And I have a podcast also. It's called the Dentist Freedom Blueprint Podcast. You don't have to be a dentist to jump on because we don't talk about dentistry, right? But my group's dentists, so I make it dentists, so it's niched, but that's a fun place. I do a lot of, like you do, a lot of fun interviews with great people, and it's fun to do that.
Very good. So we'll put all that in the show notes, and this is where every time I say any parting thoughts or parting shots,
I say, again, just take what the market's going to give you, right? Don't be greedy, but be resilient. Create margin in your life, multiple streams of income. Don't over leverage in times like this. Be careful, but surround yourself with the best people because they're the ones that will guide you through the narrows as we go forward and look for the opportunities that the market always gives us.
Well, I know you're someone that's in high demand, and I love to hear you talk and these masterminds and on the stages I've gotten to hear you on. So I'm just very grateful that you took the time to come in and hang out with us today. I
love talking to you, Tim, and thanks for having me over. This is a great set, and you're doing some great work getting the message out.
Well, man, thank you. And we are out of time. Remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.